Hello, I'm Rick Swope.
And I'm Sean Howell.
Today we want to introduce you to the concepts of fundamental analysis. Let's start with the most basic question, and that is, what is fundamental analysis? Fundamental analysis is the process we use to evaluate the economic health and financial performance of the underlying company. Each quarter, publicly traded companies issue reports that include accounting metrics such as sales, debt, and other information that will help us gauge how well that company is doing financially.
There are thousands of companies from which to select. Investors often use fundamental analysis as a way to filter through these companies to narrow down the list. Fundamental analysis helps us decide which companies to buy, unlike technical analysis, which helps us decide when to buy and when to sell the stocks.
An important point to using fundamental analysis is the delay associated with the metrics provided to the public. You see, these reports are going to come out on a weekly, monthly, even quarterly basis, and so from the time of the performance to the time the performance is reported, there's going to be a delay. Unlike technical analysis where the charts are going to update in real time. Each time there's a trade, you get new information.
And we take these reports and use them to find the companies that are separating themselves from the rest. In other words, the fundamental metrics can help investors identify companies that are leaders versus laggers in their sector.
Now, you don't have to just use fundamental analysis on an individual company. You can also look at a sector or an industry. In fact, you can use fundamental analysis to evaluate the broader markets, keeping your finger on the pulse of what's going on in the economy.
One of the more common fundamental metrics is the price-to-earnings ratio, also known as the PE ratio. To calculate the PE ratio, the current stock price per share is divided by the earnings per share to produce a ratio. Here's an example. We have a stock that is trading at $20 per share with earnings of $1. Our PE ratio is 20. Now, if the earnings per share increases to $2 and the price stays at $20, the stock now has a PE of 10. PE ratios can be a good way to do a side-by-side evaluation with regard to earnings.
Now, another metric we can take a look at is the dividend yield. This helps us look at both the price of the stock and the performance of the company as expressed through their annual dividend. In this measure, the annual dividend is divided by the stock's price to produce the annual yield as a percentage.
Market capitalization, also known as the market cap. Stocks generally fall into one of three market cap categories: large cap, mid cap, and small cap. To calculate a company's market cap, take the shares outstanding and multiply by the price per share. Here's an example. If a company that has 10 million shares outstanding is trading at $50 per share, the company's market cap is 500 million. This company would be considered a small cap stock.
One of the ways that we can evaluate the efficiency of a company's operations is taking a look at margin. This could be gross margin or operating margin. Let's use gross margin as an example. Let's say a company sells a product for $500 and their cost of goods sold is $250. That means they have a gross margin of $250 or 50%.
Interest rates may fluctuate during the course of the year. This may have an effect on the company's profitability with regard to how much debt they're carrying on the books. Changes in interest rates may affect companies with varying levels of debt.
Now, technical analysis is still an important part of your analysis. You see, technical analysis is going to help you protect your investments when trading.
Remember, the metrics we talked about today are going to change on a quarterly basis. They do not change from day to day, unlike technical analysis. Fundamental analysis can be used as a way to narrow down the universe of stocks and perform a side-by-side comparison of the economic health of each company. For timing and managing risk, we can use technical analysis.
Now, we've introduced you to the concepts of fundamental analysis. Really just gave you a taste today. We want to encourage you to visit etrade.com for more of these educational videos. Thank you for joining us.